Now, just as of recently, IWM, or the iShares Russell 2000 ETF, just recently hit a new all-time high, and a lot of analysts and investors are saying that small caps have a lot more room to grow. Which brings me into today's video. We're going to go through an income-focused ETF that buys into the Russell 2000, but then with that sells covered calls on it, offering some upside potential, but also some massive income from day one. So if you're an investor that loves income, and maybe you're an investor like myself that needs some more small cap exposure, I promise you're going to want to stick around, drop a like down below, and let's get right into this one. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now, the ETF that we're talking about in today's video is IWMI, or the NEOS Russell 2000 High Income ETF, and this is once again brought to us by NEOS. Now, NEOS, of course, brought us QQQI and SPYI, both ETFs in my personal portfolio and probably in a lot of your guys' portfolio, but for whatever reason, until this moment, I haven't really felt the urge to buy into something like IWMI because I really just haven't wanted exposure to something like the Russell 2000. But the more I research and the more I dig into the Russell 2000, I think there is a potential here for these small cap names to grow a lot in the next few years. So why not gain some exposure to the Russell 2000 in these small cap names by doing so with an income focused option strategy? Now, it says right here, the NEOS Russell 2000 High Income ETF seeks to generate high monthly income in a tax efficient manner with the potential for equity appreciation. The ticker symbol is IWMI. The net expense ratio is 0.68%, so sort of in line with most of these actively managed ETFs that offer a pretty complicated strategy. IWMI offers a distribution every single month. The ETF has been trading since summer of this year, and this ETF has been getting more and more popular, like I said, in the past several months. Now, the way this ETF works is as a high monthly income generation. IWMI aims to generate high monthly income by investing in the constituents of the Russell 2000 index and implementing a data-driven call option strategy. Now, again, I personally don't have much exposure to small caps, and I really haven't ever thought about investing into the Russell 2000, but because the market as of right now is pretty frothy across the board, it's always interesting to look for different opportunities, or at least different areas that might offer opportunities, which I personally think gaining some exposure to the Russell 2000 could be that opportunity. Now, it then says tax efficiency, which is also great. IWMI utilizes the RUT index options classified as section 1256 contracts. This is 60% long-term, 40% short-term capital gains, and fund managers may seek to take advantage of tax loss harvesting opportunities. Now, it then says upside potential. IWMI aims to capture a portion of the Russell 2000's upside when the index rises, which it has a lot as of recent. Now, lastly, it says professional option management. Leverage the deep expertise and research of NEOS, combining decades of experience managing option-based strategies. Because of course, you or I could buy into the Russell 2000, implement our own call option strategy, but honestly, not only could that be very expensive, but also very labor intensive. Now, some more important facts about this ETF. Like I said, it does offer a distribution monthly, which we're going to take a little bit deeper of a look into in a second. But the distribution rate as of right now is 14.83%. Now, I wouldn't necessarily consider this an ultra high yielder, maybe anything above 17 or 20% ultra high yield. But hey, 15%, at least as of right now, is a massive distribution rate, especially if they can keep that up and maintain it. Now, a share of IWMI, the NEOS Russell 2000 High Income ETF, cost around $53 or $54 as of filming this video. The ETF is up around 6.34% on the max time frame, and again, it has only been trading since about June of this year, but still, for an ETF that offers that sort of distribution rate, anything in the green on the max time frame is sort of a win in my book. The ETF as of right now is trading towards the higher end of the 52-week range. It's not at the all-time high, but again, with the Russell 2000 soaring as of recent, this ETF is tracking it. Now, to look at the specific payouts so far, we have a 63-cent payout. This was as of last month. We have a 62-cent, 62-cent, 66-cent payout, and 60 and 55. So more or less like all the other NEOS ETFs, they're sort of paying along a cadence of anywhere between maybe 50 to 60 cents per share per month, which again gives an investor around a 14 or 15% yield, which is gigantic. Now, lastly, if we were to dig a little bit deeper into IWMI's total return, and again, it's only been trading for 0.43 years, so of course, take this with a grain of salt. The ETF so far, with dividends being reinvested, has a total return around 15% or an annualized gain of around 34%. Now, who knows if IWMI will continue to trade the way it has been and or keep paying the amount of income that it's been paying. But if it were to do so, a 30+% annualized gain is outstanding. Now, like I mentioned several times, I don't necessarily know if I want Russell 2000 exposure. I have a ton of NASDAQ exposure in my portfolio. I have a ton of S&P exposure. But honestly, as I get older, diversifying in even more different stocks, different names, different areas in the market seems a little bit appealing to me. And by doing so through a high quality income oriented strategy that's going to pay me anywhere from, let's say, 12% to 16% in yield per year, and on top of that offer it in a tax efficient manner with some upside potential, now that sounds like a pretty good option to me. So will I be buying into the IWMI anytime soon here? I most likely will, but I'm not exactly 100% certain. But in the case of getting Russell 2000 exposure, I would definitely choose something like this personally. So now that we talked about IWMI, the Niels Russell 2000 High Income ETF, a newer ETF that I personally haven't bought into yet, but I'm definitely thinking about it. I lastly want to hear from you guys down below. Do you personally have any Russell 2000 exposure, small cap exposure in your long-term portfolio? And what do you honestly think about IWMI as of right now? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.